Okay, everyone, this is good morning. This is Sunday, April 6th, 2025. It's about 9:25 a.m. Eastern Standard Time as I make this video for you. My cover photo tells you everything that needs to be told about what happened. We've been warning about this over the last, I would say, 3 to 4 weeks that a market crash was imminent. We gave you all the signs and symptoms over the last 6 months why these type of market action was overdue, and we've been trading accordingly, profitably, and we had a whopper of a week. And we'll go over all the technical market analysis as well as what we expect going forward. And folks, the bear is now awake and he's guarding the keys to the market right now, as this picture shows. Okay, and this sell-off is not over yet. It still has been very, very orderly, and everybody's freaking out because we are down 5 or 6% on Friday. I don't think people have experienced a real market crash, which I believe is coming, and we'll tell you why that is. It doesn't mean that the markets will not bounce for a couple days or intraday, but you have to short those rips, and that's what I've been talking about the whole time. So let's move forward. Please pause this and read it. If you agree with my disclaimer, please move forward. And of course, my shameless plug, most of my posts are done on x.com, including this video. I do post on YouTube. I appreciate subscription and follows on x.com and YouTube. Subscribe, like, and comment below. All right, let's get started. And so the black swans, I've been saying that there are black swans everywhere, and I even posted last week a beautiful black swan because there's so many black swans. It'd be it would have been a miracle for something like last week and the previous couple of weeks to not have happened. I think it woke people up last week on Friday, April 4th. But I gotta warn you, there wasn't any capitulation. It was still a very orderly, grinding sell-off. Okay, and everybody thinks that the market has crashed, and I'm arguing with you, and I'll show you why the market has just started to crash. And I think this is going to be a multi-month deal. Yes, it's not going to crash in a straight line. Yes, there will be relief bounces. But right now, the fear is so palpable, and a lot of people are out there saying, hey, look, the market is so oversold and it's going to bounce in May, but it's going to continue to fail. It's going to take a lot of those attempted rescues and bounces. I don't know if you believe in the plunge protection team, all of those kind of things. Those will continue to fail, partly because we have now institutional selling that is happening. And so institutional participation on the sell side, you do not want to get ahead of that. And there's so much froth in this market. It was long overdue. Okay, you can't print money to oblivion. You can't rig the 10-year treasury market and expect something different. And of course, everybody's blaming the tariffs, and that's part of the cause right here. The tariffs are definitely spooking the people out right now. But I've been saying all along that, this should not be I've been saying along that this should not be something that you should worry about. United States is preparing for bankruptcy, reorganization. We're becoming protectionist, bringing back manufacturing jobs, slapping tariffs on everybody is a protectionist movement. And no matter how you put it, okay, that is what United States is preparing to do, and the rest of the countries following worlds will follow what we're doing. Okay, reciprocal tariffs and all of this stuff is just basically a big jargon saying that, hey, we can't continue on this trajectory of massive debt, massive corruption at every single level, and print money to oblivion and pretend everything's going to be okay. And when you print that much money, there's misappropriation of capital, misallocation of capital, and obviously there's going to be fraud underneath. Okay, for those of you that are surprised that the market is behaving like this, I would argue it has just started. Okay, of course, everybody's worried about the China retaliation, how they're going to put reverse tariffs on us, and they're becoming more belligerent, and they're trying to block also the Panama Canal acquisition. I mean, why would you think that's even a surprise? Okay. And tariffs and protectionism generally leads to broader world conflicts, okay, like World War III, World War II. All of those are protectionist measures. We'll see how this shapes out. Stock market sell-off. Notice I'm not using crash yet because I do not believe the market is in a crash territory yet. It's entering into correction territory, not yet. And of course, U.S. bankruptcy, okay? If you do not think that we're not doing this, that Trump is not doing this, Trump is the master of creating and emerging from bankruptcies with his companies. So why would he not do the same thing with the current situation? This is a warning, all right, folks? For those of you looking to buy the dips, you can only do that for a scalp. Profitably, might I add, but you got to know what you're doing. Okay, so let's look at the market technical picture. I'm not going to go over the news clippings and my segment on look at what they do, not what they say section, partly because obviously some of the algorithms don't like that. So I'm going to delve right into the market technical picture. And boy, what a difference a week makes. Boy, you thought there was extreme fear last week. Well, this Friday, this is from obviously the April 4th. This one is from March 28th. We are now at 4. And everybody's out there screaming that the market's going to bounce, that it's going to recover. I argue that just like when in a bull market, right? Bullishness begets more bullishness. Overbought conditions begets more overbought conditions. It's the same thing on the way down. It's going to be faster, yes. Okay, we got to be prepared for these extreme bounces, but extreme fear begets more extreme fear, more sell-offs. Okay, it's just like a disease that takes hold. Okay, so I said fear begets more fear, right, folks? Let's look into that now. All right, before everybody panics, okay, this is last week's March 28th, sorry, there's no 38th. And I said previously that, really didn't change much from the previous week of the March 28th. But now, as I have been warning, we now finally have a sell-off right into this area, okay? And if you look at the grander scheme of things, I have been warning you that touching of these top-end lines are recipe for disaster. And what I'm saying is that we have a situation where we have a little bit more to go before we get a little bit of a relief bounce, maybe for a couple of weeks up this way. But I think we're going to get maybe a mild capitulation sometime this week, followed by a bounce that's going to be shortable. For those of you that missed, this sell-off, and I always say, sometimes you'll take losses positioning for short positions. It's inevitable. All right. But you either have those positions or you do not. And if you haven't looked at the IV percentage and the premiums on the options and futures options, you'll know exactly what I mean. Right. And we'll go over kind of our positions and what we've been doing, what I'm thinking going forward. Do I think that there's more meat on this bone? Yes. Do I think that there's going to be some intraday relief bounces where all the bulls are going to come out and say that, the sell-off is over, buy, right? Okay, those guys are going to become fuel for the bears. I do not believe we're done selling off just yet. But those of you that fail to heed these warnings on my long-term trend line are now basically wishing that you had listened, or basically wishing that you weren't so long. Okay, so that's what I wanted to talk about. And then, of course, my super cycle analysis. This was from the last 2 weeks. This was from March 28th. And I said, hey, look, super cycle analysis shows a bounce came. It ended on last Friday, which that was March 38th. Okay. Again, I'm saying March 38th, March 28th. Okay. And basically, it started now and ended on Friday right there. And it did on Friday because by April 4th, we had this gap down. Okay, this is what initiation of the sell-off starts. Okay, yes, this is a daily chart, and that's where I do the analysis. MACD has crossed over. We are forming a MACD death cross. Okay, there is more meat on this bone. It's just not doesn't mean that throughout next week that we're not going to have like maybe a 200-300 point rallies, but those are the ones you have to short into. Okay, you want to learn more about doing that? hit me up. Join my group. All right. So basically, I've talked about also on the VIX. All right. On March 28th, I said VIX hit 16.88 and it rebounded. That was the rebound that I was talking about. And then I said market crash resumes soon this week. And did we resume or what? 45.32. Those of you that are holding the VIX, congratulations. All right. You guys are the master traders. Okay. Those who can trade VIX can trade any markets. That's what I say. All right. And then, of course, my famous McClellan Summation Index. This is from March 28th. This is the one from April 4th. And we have so much meat on this bone, it's not funny. We got a bigger blip down. Yes, there's a little bit of flattening on the MACD, but it's just going to be noise. It's just going to come right back down. We have all of this volatility box to test and this area to come in. If we start getting into these regions on the MSI, I'm going to be looking for a big multi-month relief bounce. Okay, it's not going to crash in a straight line, folks, but the crash resumes this week. All right, and so that was from last 2 weeks. What I see now is that we have these little blip. We have basically a RSI that has basically become negative and needs to get below this line, and it needs to test these two levels, just like we talked about. It will happen. There's a lot of meat left on this bone. Once it gets down into this region right here, I'll be looking for a bounce. Okay, multi-month bounce. The ones that can make you a ton of money on the upside. Okay, so pay attention to your McClellan Summation Index. So let's see what's going on with the S&P 500 technical analysis and then review of the past performances. And we got a lot to talk about. We were busy selling for profit on Friday. Okay, so SPY. All right, I'm not going to spend too much time. I did warn you. I said this red line was basically an inflection point. If we lose that, it's going to get impulsive. And we did get impulsive. And everyone says this is a crash. But, realistically, if you think about it, that we dropped like about 6%. All right, that's not a crash. All right, it was very, very orderly. It was very, very... it was impulsive, but it wasn't the type of panics where you see the whites of Satan's eyes, right? Where everybody's throwing the baby out with the bathwater and screaming that the world is ending. That's not there yet, okay? And it's been very orderly. Yes, this range was big, but because there's so much froth, I think really the breakout really began at around like this 480, 340 level. This level is where the correction is going to take place. And then we'll get our bounces. So we took out the first volatility level, first target. We still have a narrow range, and I believe we're probably going to come below here. There may be a little bit of a back test into this green line, which is 100 SMA. I think we're going to do that. If it does bounce, that's a gift, folks. Okay, short it up to this top range, and then let's take that out. This is going to be a very, very weak support area. We're going to get some major reactions here. Like I said, it's not going to happen all in a couple of days or weeks, right? And it's going to be, this rip your face off rallies along the way that may last a couple of days to a couple months. But we are headed into this 440 region. I believe that the selling resumes and possibly a gap down on this Friday or Tuesday. Okay, you got to understand also the market crashes do not occur on Fridays or Thursdays. Historically, it happens on Monday and Tuesdays. You never hear about Black Fridays unless it's Thanksgiving sales at department stores, right? And even that's dying out. So this is basically weekly. And the reason why I showed the weekly first is because the daily, I'm out of room. I can't show you much of anything here, but what I can say is that we're beginning to show directionality on the RSI. There's no more divergences. We broke through this support level, over the last 3 days. And so people are calling this a crash. And I think we're going to continue to get some of these. Yes, see these little wicks? Those are rally attempts that gets failed, okay? You got to take advantage of those. Otherwise, the premiums will kill you. CCI is completely negative. We have stochastic that is fully directional. Yes, we have some pinching going on, and I do believe there's going to be a pretty decent rally coming sometime this week or the following week, but not before people really get scared, not before we break the 500. We start getting into the 486, 468. I think that's where we'll get the bounce, but the bounce will be short-lived, like everything else that's happened here, because what we need to understand is when we had this little pinching action right here, right here, okay, we see that. So when we had that little pinching action, we basically had a little, probably like a week or two worth of rally. So what I expect is if we do get a bounce, we're just kind of blip out, maybe try to cover half of this area right here, and then come right back down. Okay, if that happens. We may just continue to sell off in an orderly fashion. One of the most rigged markets in recent memory. All right. So I wanted to share with you Restoration Hardware, and then let me just bring this up right into this area. Okay. And what I've done is that Restoration Hardware on Wednesday, we took the earnings play. Okay. And I said, hey, look, Restoration Hardware is something that we're going to play, earnings play, 411 expiry. I mean, this thing doesn't even expire until next week. We're still holding runners. But we got the $200 puts, okay? And this was one of the biggest whopper of a trade that we had. I mean, because we literally from 200 from here, and, we started scaling a little bit out. At 60, or so, and then we started scaling out into this area. I believe that maybe there's a little relief bounce unless the market crashes. Our Restoration Hardware, folks, is headed into 110 to 98 level, not all in 1 week, okay, not all in 1 day. All right, but it is going to test down into this area because Restoration Hardware has some significant accounting problems. They've been booking future earnings off of the sales, and also because housing market is crashing down, and people aren't spending $500 for a doorknob anymore. This is something that I'm telling you, we're headed to the 80s, and there's so much meat on this bone. But Brandon, it's down like almost 50% in 1 day. And I said, well, no, it's not down almost 50%. It's down more than 50% since I identified the double top way back here. All right. So is there going to be more drop coming? Yes, there is, but wait for the bounce if you haven't taken this. There's still a lot of meat left on this bone, but the technicals will start getting more oversold, and we're going to have these intraday rips, and it's going to get more and more difficult to keep the discipline to short. Apple, however, is just getting started. We now have basically come down into this rounded top area. So this is that red volatility box. That's where we're at right now. We finished slightly below there. Maybe we try to get back in, but the next targets are 176 and 165. And if market gets impulsive, mind you that there is a 200-day SMA right here, but RSI is telling you that there is no stopping this. Apple has been propped up. The bankers were using this to prop up the S&P 500. No more. Okay, this is very methodical sell-off that's happening right now. Yes, the CCI, it's gotten more negative, but yeah, it's definitely, is it down to this area yet? It's going to get there, maybe this week. That's why I think there's going to be a little bit of a bounce towards the end of the week, but not before major conniption fit happens in the market. People just aren't scared enough, even though the fear gauge is at 4. If you listen, people are just nonchalant about it, but this is some serious shit that's happening, folks. PPO-ADX is continuing to show the negativity. We have accumulation distribution finally blipping down and showing you that the selling has started. The other one that I want to talk about is Deutsche Bank, right? Deutsche Bank. Okay, one of the biggest zombie banks of the world took up Credit Suisse. I think we're basically headed to 1778 and into 1550. 1455 and 1271 in short order. These banks are in trouble. They're holding the 10-year treasury yields. You can see the Fed trying to support that. Fed will sacrifice the stock market to support the 10-year treasury, folks. All right. So that's what we got for the technicals. And, not to gloat, but, people are wondering what we do. So we took 516 Deutsche Bank about 2 weeks ago. Okay. We bought a lot of time. It was super cheap. It was like we bought these Deutsche Banks for like 65 cents, $22 puts. And then, of course, about 2 weeks ago, we were buying the 560 puts when we were threatening to start hitting that 600 again, expiring on May 28th. And then, of course, I said, hey, it's come to my attention. Everybody's like anxious to sell, especially when you're up, 60 plus points, and then you paid like $3 for these, right? That's a 20x trade. So we took some off. We're letting about 25% run. I told everyone to take Deutsche Bank half off. Yeah, so this is what we do. We talked about the different levels. I'm saying, hey, we're already hitting our target 3 before the bell rings. Gold, silver got damaged, of course, but it's a pan sell-off. This is what happens when you throw the baby out with the bathwater, right? I said sell your 535 half at the open and let the rest run until at least 1 p.m. And that proved to be a wise decision, right? We made a 12, 15. Some people made 20x off of those. Dollar Tree finally made about 5x on this trade. SMCI, we sold half at the open for about 10 to 12x. All right, so Tesla, we took that way back up here. So you see this, where was Tesla? We did take Tesla somewhere. Yeah, we didn't. Maybe it's here. But anyways, that's what kind of we have. And then, of course, just pause it and read it. Restoration Hardware, I said, hey, look, this is like a 60 to 100x trade for some of you. So if you haven't, if you have the runners, but selling it is a good idea. I mean, you can't be pigs at this point, right? And we did some yellow. It didn't work out. I thought we might have a chance at breaking 500. But if you're up, even $1,000 could be taking you to a 50K to 100K. And if you're up that much, you can take this. All right. So we did very, very well. And this is not without, pain and grief along the way. It's not easy being a short seller, but we're not just short selling group, and we'll go long. We play both sides of the market. So if you want to learn more about what we do here, click the, just DM me or email me at brandon@protonmail.com, Coach Brandon@protonmail.com. Sorry. So let's find out what's going on with XRP and everything else in between, okay? And so XRP is basically not faring well. But that's to be expected. This type of pullbacks are the gift that you guys are afraid to take right now because it's selling off and you think it's going to go back to 50 cents. And even if it does, you buy it with both hands. This is a hodl situation. You hold on for dear life for the next 2 to 3 years. The other one that I'm interested in is that Shiba Inu looks like it's near the bottom end. It really hasn't really done much. But I think once this conniption is over or we get the relief rally, you're going to see this one taking off a little bit. The other one, obviously, that we like is XDC. All right. Holding up pretty decently. XTZ is Tezos. I like them, but I don't really talk about them. Bitcoin's at 82K. Again, for those of you, we had a massive run up to the 105,000, 106,000 level. All right. These pullbacks are normal. If you can't stomach this, you can't be trading cryptos. All right. So this is my list of things. And if you want access to these lists, you got to join my group, right? So let's look at the watch list for the week. Last week, how did we fare? Yeah, here's our sell signals. This is my crush indicators, okay? We made money. All of you who basically just casually watches this, and I, really, I'm not going to change anything. Everything is sold off. But here's Sam Adams. Here's a good one right here. Okay, that is something that I will say that I will probably feature in our group. There, I gave you a freebie, right? Tesla, we got sell signal. Tesla has more meat on the bones to sell off. United Healthcare finally got a sell signal, so we'll be focusing on that next week also, along with the markets, right? BKNG. Watch this BKNG, right? We talked about that. I said AutoZone is ready to sell off. It got the sell signal. It's not too late. This AutoZone needs to correct down. People can't afford to buy cheap Chinese parts to fix their cars anymore. They're broke. CMG, we talked about O'Reilly. O'Reilly has a lot more meat left on the bone. We featured Deutsche Bank, did we not? We took it. This is what happened. And we made a lot of profits off of it. And of course, we got JP Morgan Chase. Too late to chase that. So where do I see the opportunity? I see the opportunity in gold and silver. Yes, they slammed it down. That's artificial. There's over 28 million contracts short on silver right now. Okay, that's not going to end well. That's the market rigging, price fixing that's been going on for years. All right, silver is the most suppressed assets in the world. Okay, but gold is still above 3,000. It hit 3210, right? I mean, it's going higher, folks. Buy these dips with two hands. These are where the value is right now, right? Unless you can time it on the bounces and short the market. But the risk is that every day that this sells off, every day that it does it in an orderly fashion, it increases the likelihood of a rip your face off rally. Tariffs are just an excuse. Truth is more sinister. Fed is in trouble. They're selling stock market to prop up 10-year treasury. Fed is the market, folks. Market of last choice. It has been like that since 2008. If you think this market is efficient, it's not. Okay? So more pain for the markets next week, and I believe that is happening. So everyone is panicking because the market is down 6% on Friday. Come on, guys. All right? You guys haven't seen real market crashes yet. Okay, U.S. bond is under pressure. The Fed has lost all credibility. Rates unchanged. Fed is trapped. What they'll do is Fed will only support what? What are they going to support? They're going to sacrifice the stock market to support the 10-year bond. Okay, that's why you see the TNX. I didn't feature it here, coming down. That's yield coming down. All right. And a lot of people are saying, well, Trump is doing that to bring yields down. No, if you go and look, all right, mortgage rates really haven't dropped. Nothing is dropping. Everything is lip service. Okay, until it happens, we'll see. Gold and silver got slammed. The slam crew is alive and well, but they got help from Mr. Market. XRP and Bitcoin is under pressure. This is foretelling of a bigger market drop. We talked about that, but this is also buying opportunity. You need to be nibbling into this. Restoration Hardware was probably biggest winner for us for the week. At least 50x. Some of you did like 70 to 100x. Okay. So long gold, silver, VIX, XRP, you can watch the short watches. Basically, it's getting slim pickings right now, right? Many stocks are extended to the downside, but watching for an intraday rescue attempt, that's your key. But you got to make sure that it doesn't keep going higher, right? Watch the banks. More meat on this bone. Comerica, Deutsche Bank, Bank of America. All right. JP Morgan Chase. Crash has just begun. It hasn't really started. It's too orderly. When things get impulsive, when things speed up, and what I call the whoosh in the market, that's when you know the bottom is near. And we'll also use our McClellan summation to help us with that. Anyways, follow me at Galaxydoc Market on x.com. Follow me there. There's a lot of intraday stuff that I post. Or better yet, join me in my group. Folks, join me. We're doing great. I mean, a lot of people went over like 6-7 digits last week. Okay, so email me here, and instead of saying, "Oh, you're too expensive" and things like that, there's things in the works. Just ask me. Don't be afraid. All right. Like us, share us, and above all, comment, subscribe to YouTube. Okay. Like I said, I have some issues with YouTube right now for some reason. Just not getting the views. It's probably because I was talking about stuff, which I'm not doing here. Anyways, thank you, and let's get some alpha. Okay, be careful out there. It's going to get real. Bye-bye.